10-year Treasury futures picked up where they left off on Friday, with yields going higher. And in fact, on the overnight session, yields touched 139. That's the highest level we've seen in a year. Traders came in this morning wondering if risk assets are going to finally take notice of yields persistently going higher. That said, we saw Shanghai stock market down about 1.5. European bourses, FTSE, and German exchanges were down fractionally, and the U.S. definitely started with a risk-off mode in the morning and has since bounced back a little bit. Seems like fears of reflation are being baked in again. News that Pfizer is going to double their allocation of vaccine to the United States. And overall, traders wondering, is the economy going to go back to normal a little bit more quickly than the Fed has suggested with dot plots? So all that to say, we're seeing yields persistently higher. Data, trade flow, news flow, pretty interesting today. Trading came in overnight, elevated 164% of the 10-day average, with 10-year treasuries taking 37% on a cash basis. Inflation expectations are troublesome to some when you figure that break-evens have dropped about 11 basis points in the last 5 days, whereas nominal yields have gone up 14 basis points. That equals a quarter-point rate hike that's not baked in. And so, again, traders wondering, when's this going to break, if it's going to break, and what will happen with risk assets as futures continually to go lower. Beyond that, looking at the really fascinating the CME CVOL tools. Vols are slightly higher across the board, fractionally so, especially in the front month. The curve is somewhat interesting. Looking at April, up around 420, and you have May and June flat at 415. That said, there seems to be, again, continued buying of out-of-the-money calls and also out-of-the-money puts. The call buyers looking for a reversal in yield, and the put buyers looking for the trend to continue. But vols slightly higher across the board, especially in the front month. Kind of a dataless day, but knowing that a lot of Fed speak coming up this week and traders prepared, will the trend continue, or will we finally see a respite and a reversal in what's been a pretty big move in the past 10 trading days?